Hi there and welcome to Dukascopy's weekly wrap-up. It's been a crazy few days as the Swiss National Bank announced in a surprising move that it has removed the franc's cap against the euro. I'm now joined by senior currency analyst with Thomson Reuters, Robert Howard. Now Robert, coming to the end of the week, the main focus is that the SNB have thrown the markets into chaos after yesterday's announcement that they are abandoning its 3-year cap. Putting it simply, have they made a mistake?
I think it's definitely fair to say is that the SNB will have very probably been surprised by how much the Swiss franc strengthened both against the euro and the US dollar. When they introduced the cap, the 120 floor in September 2011, a month after Euro Swiss had threatened parity, and I suspect they might have thought Euro Swiss at its extremes might drop to threaten parity, but I don't imagine they would have envisaged it breaking parity and going all the way down to 0.85, which was the low. In that respect, you could argue that yes, made a mistake, but obviously that would be with the benefit of hindsight. Certainly, yesterday was probably the biggest day in the FX market since Black Wednesday and the run on the pound back in 1992. But so yeah, certainly huge day yesterday, huge.
Now, even some of the bigger companies are feeling the effects of the fallout. Can anyone be immune to this?
Yeah, this is a very good question. I mean, the background to the floor being introduced in the first place was to protect Swiss exporters who are just really going to struggle to compete with European competitors. With Euro Swiss was close to parity, and obviously 3 and a bit years on, that's where we are again. Certainly going to do nothing for Swiss exporters, and it's not going to lure too many people to Switzerland for holidays. And so from the smallest to the largest, everyone is being impacted by this.
With the market in such turmoil, what events or data releases will investors be looking to, as well as the ECB meeting? Yeah,
the biggest event risk at the moment beyond the ECB meeting, and of course what the expectations of the QE announcement from the ECB are, certainly seems to be a key factor in what they did yesterday. Obviously, 3 days after the ECB meeting, we have a Greek election, and the opinion polls suggest the opposition Syriza party are on course to win that election. Now, by no means certain that, far from certain actually, that Greece would leave the euro if Syriza win, but if Syriza win the election, the risk of Greece leaving the euro is certainly higher than if New Democracy are re-elected. And this is, to say, another event risk which is out there and sort of, something that is very jittery. I mean, if the polls are wrong and New Democracy do end up winning, the euro could recoup some of its recent losses on the back of Brexit risk sailing off into the sunset in the same way that it did after New Democracy won the June 2012 election. But at the moment, the polls suggest Syriza is going to come out on top.
Thanks for joining me, Robert. That's all for this week's wrap-up. Remember to click back to Dukascopy TV on Monday for the very latest updates. Bye for now.